Scott in Bangkok. Hi guys. How do you factor in end of the quarter dynamics into your analysis of the market signals? You've talked about this a lot, how we often kind of get quarter end or month end markups, stuff like that. But I think part of it is there's a lot of action that you can tend to see at the end of the quarters.
Yeah, I mean,
people want to take things off the sheets, put things on the sheets, pretend they had the winners in their portfolio.
Yeah, you're like, so when you get one of the most important quarters in asset management is, of course, the end of the third quarter. Because some people, by the way, have their fiscal year that ends right on time there or in the coming month, October. So you have, and then obviously it's the setup for the fourth quarter. So the art of managing money, this is a real interesting one, is to keep the money, okay? So you got to keep the money, you keep the narrative. In a market, in a season that the S&P 500 is currently up 19% and people are like shorting it and calling for corrections, you either are or are not up, that kind of a number, and you have to explain yourself, right? So what happens into the month and quarter end anyway? Number one, people mark up their books, okay? It's called the month end markup. From Bangkok to Tennessee, you guys can take that to the bank. It's illegal, by the way, but people still do it. They do it more so in a couple days before, because it's really illegal and like in the last hour of the quarter.
It still happens, though.
Still happens, all right? So you get two, the stuff's getting marked up, and that dynamically, you'll see that dynamic, not every single month, but in a bull market, absolutely. And then the other thing is that people have to chase, right? Why? Because they have to chase the benchmark, all right? So when you take these two things and you go to like part A of the third of quad 2 and Q4, if we're, God forbid, right on this, what if you're Captain Hedge Fund guy who's up like 2 or 3 or down 5? And this is happening. These two things happen. You write your month end, quarter end letter, and you're like, it's the end of the world. It's going to be the end of you getting the beginning of you getting some redemptions. Let's start with that. So people have to chase. And what you find in the hedge fund business, and this is a dirty little secret, if you're not running neutral, people generally are levered long, right? So it's been unnatural for people not to make money this year in a bull market. Why? Because they blew up in the first quarter due to quad 2 in Q1 conditions like high short interest stocks, which you should be long in quad 2. That eviscerated people. And then as we got into March, rate sensitivity eviscerated people. All these things are quad 2 realities. So when we go back and we look at what happened this year, identifiably people blew up because they didn't do macro the right way. They were macro tourists. And if that is a hard way to hear that, that's too damn bad. That's the lesson. The lesson about this game is that it's hard. If you don't have a process and you're constantly reading and reacting to headline risks or your own emotions or politics for that matter, you're dead, right? And you may not be dead like every single month and every single quarter, but over time, the machine's going to eat you up. So again, there are a lot of people that are going to observe this reality and say, holy shit, I got to make some money in October. I got to put something on the board for my investors because I'm not that stupid, right? People in this business are very intelligent, and they understand that when the score is going one way, that they should get on the bus and go that way. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.